In the equity market, taking a look at the S&P 500 futures, another rough day for the equities as we had an early reversal. The S&P started out higher this morning, then reversed lower, going down almost as much as 2%, 1.95% lower on the lows of 42.1625 in the March contract. I said we started out higher. We were up 1.06%. when we hit the high today in the March contract of 43.4550. We are now down 4 consecutive sessions. We finished today down about 1.77%, about 1.75% down on the day. We're now down 5.48% approximately in the last 4 sessions. We're also down over 12% from the highs, so we're well into correction territory now. And then an earlier note that came out from Morgan Stanley, they put their year-end target for the S&P 500 now at 4,400, only 100 points above yesterday's settlement. So that would clearly be negative on the year. That weighed on markets as well. Now, the energy sector was the only sector that was higher today, up a little bit less than 1% in that energy sector. All the other macro sectors were lower. Even when you dial down to the micro sector, you take energy out of the equation, only 2 micro sectors were higher. We had tobacco, which is part of consumer staples, and then we had metals and mining, which is part of the material sector. Both of those macro sectors are defensive, and those are the only 2 micro sectors, again, taking energy out of the equation, that were positive. So it was a very, very weak day overall. And then you notice that yields in the U.S. didn't really respond to Russia-Ukraine tensions. The situation not getting any better over there, but U.S. yields actually rose. So we're not getting a flight to safety, at least not into the treasuries. The dollar did rally a little bit, but again, mostly off of higher yields. When you look across the yield curve, the only yields that dropped were in the short end, 3 months, 6 month, and 1 year, all fell 1 basis point, but the rest of the yield curve was up anywhere between 3 and 5 basis points, depending on where you were looking. So overall, a weak day, higher yields, equity market sell-off continues.